only do we have to think about that, but we also have to think about how many Canadians are coming up for renewal this year and next year.
Absolutely.
How will that affect them?
Well, I think that, we've got record amount of mortgage renewals coming up in Canada. It's over like 1.4 million of mortgages coming up this year.
Interest rates are very interesting in Canada, especially when it comes to mortgages. Some people in the States, if you're watching, you might not even know that there's a thing called mortgage renewals in Canada, where basically every 5 years you have to qualify again for your new mortgage and get a different interest rate. Sometimes if you have a variable rate mortgage, it changes literally week by week, sometimes month by month. But if you have a regular set mortgage rate, it'll be 5 years at that rate. Then you get a new rate after 5 years. And sometimes the rate can be a lot lower if the economy and the Bank of Canada's interest rates are down. But if they actually skyrocket interest rates, then you could lose your house if you can't afford to pay those interest rates. So it's very scary. And we're actually set for a lot of these mortgages to get renewed because a lot of people bought houses during the pandemic in 2020 and 2021. So we could be heading for disastrous consequences for the Canadian economy. With that being said, let's discuss it and react to a couple of videos on today's video.
Toronto! Over 1 million Canadian mortgages are set for renewal in 2025. And if you own a home in Ontario, here's what you need to know. According to this new report, over 85% of the mortgages set up for renewal in 2025 were signed back when the Bank of Canada's interest rates were at 1 or less than 1%, which means over 1 million homeowners with a mortgage will soon face a renewal at a significantly high interest rate, which is very concerning for our Canadian economy. And the Bank of Canada has made 4 consecutive cuts to its interest rates this year in 2024. And here are a couple quotes about the concerns for the Canadian economy when it relates to mortgages. So Toronto, if you're up for a mortgage next year, let me know your thoughts below.
Yeah, it could be disastrous for the Canadian economy. If a lot of people were getting interest rates that were like 1%, now I think the average interest rate is about 5% right now. It could be a little bit lower than that. We actually got our place at, I think it was a 5.25% interest rate. So if we were to renew right now, it'd probably be around the same, maybe a little bit less. But you never know the way interest rates are going right now. It could be on the decline. It could be rising soon, to be honest, because there's so much economic uncertainty as well because of the tariffs.
Bank of Canada's 2025 Financial Stability Report highlights growing concerns over household financial strain as a significant wave of mortgage renewals approaches, compounded by ongoing global trade uncertainties. Key highlights: mortgage renewal pressures. Approximately 60% of Canadian mortgages are set to renew in 2025 and 2026. Many borrowers who secured ultra-low fixed rates during the pandemic will face higher payments upon renewal, despite recent interest rate declines. Household financial adjustments. While many households have built financial buffers, the bank notes that increased payments may necessitate spending reductions or tapping into savings.
Well, of course, if the interest rates, remain high and people have to renew their mortgages, maybe a lot of people were able to spend a lot more money than they would in the economy because they had really cheap interest rates on their home. And obviously that's the biggest payment that you're going to make if you have like things going out of your account. Of course you're going to have other bills, but no bill is going to be bigger than your mortgage.
Not only do we have to think about that, but we also have to think about how many Canadians are coming up for renewal this year and next year.
Absolutely.
How will that affect them?
Well, I think that, we've got record amount of mortgage renewals coming up in Canada. It's over like 1.4 million of mortgages coming up this year and probably around the same, I know, next year, if not higher. Here's where I think we're going to hit a bit of an issue next year on renewals. If we see that values are not going up and we see them pretty flat, which if you looked at even a month ago, we were seeing projections of values still going up healthy 5 to 8% in certain markets. And that's changed a lot with what's going on with the tariffs. And that's still an unknown. It's hard to forecast. I'm going to tell you, in this environment, no market expert could forecast accurately given the unknown that's out there. And it's held by one person. We all know who that is in the States, right? To make that initiative, because that's going to drive where we go.
Oh boy, I am excited for the future. Economic uncertainty to the max. We just got out of the pandemic a few years ago, and it feels like we're in another really bad financial decline because of stuff like this, because of this stress, because the interest rates changing so drastically right now, the tariffs, and these mortgage renewals are really something that's been on people's minds. It's been on my mind, though my mortgage isn't going to be renewed for at least another maybe year and a half. So hopefully things get sorted out a little better by then, because if not, we could be in for a brutal future.
80% of the people that renew their mortgage is actually refinance for a larger mortgage for more.
They either refinance, add debt to it, or they re-amortize it to make their payments lower. So at a 20-year amortization and the rate went up a point or two, they might bring it to a 30-year amortization to bring those payments more in line. So over 80% of renewers are doing that.
That's a pretty scary thought.
Ticking time bomb for current homeowners. Around 1.2 million Canadians who secured super low mortgage rates of around 2% in 2020 and 2021 are about to face renewals at rates above 5%. That means monthly payments could spike 30 to 40% overnight. And with the amount of real estate activity and refinancing in those years, this increase will be affecting 1 in 5 Canadians. Canadians are already heavily burdened with household debt at about 185% of disposable income, far above the 125% average of other G7 countries. This increase could be the tipping point. For many, these renewals may become unaffordable, forcing distress sales. This will add more inventory to the already record number of court-ordered sales in both Toronto and Vancouver. Everyone always talks about being house poor, but with the renewal shock brewing in 2025, which increases monthly payments even further, it will reveal just how vulnerable our housing market really is. Continue following for part 2, where I will be discussing the insane levels of current delinquency rates and the disappearance of lenders.
30 to 40% higher on your payments. I don't know about you guys, but there's no way we can afford 30 to 40% higher payments on our mortgage if it gets renewed. So that is a very scary thought. So hopefully interest rates don't go much higher than they are right now, especially considering the amount of mortgage renewals that we're about to see in the next few months. Let me know your thoughts about this video down below in the comment section. And with that being said, guys, I'll see you in the next one. Take care.